following content is a technical analysis on the US dollar, euro dollar, as well as deep diving into the gold spot price to USD based upon the weekly and daily intervals, where I had continued to hype and harp in all of my previous videos. The longer the time interval, the more likely it is to dominate over shorter term timeframes in terms of increasing the odds where there are only probabilities and never certainties. Starting off with the euro dollar, based upon the daily realm, I believe we've reached a critical juncture, a very monumental multi-year based upon a concealed, hidden primary uptrend line with multiple reactionary highs and lows to strengthen the validity of this price support level. While retail traders and human perception at this level may struggle to discern it, algorithms, computers, and machines will consistently identify and give significant consideration to this hidden reactionary high and low uptrend line, whereas we had a nice clean breakdown sell signal based upon the July 2022 summer, and it was a sell-off since. Ended up coming to retrace most of that move, consolidated briefly, held shy to retapping that primary reactionary uptrend line, and was sold off aggressively once again, backtesting the 50 exponential and 50-day moving average, only to be rejected. And then we put in that nice, clean, positive, bullish divergences amongst all three technical momentum indicators, and it was lights off to the races, backtesting off that 50-day moving average once again, finally broke above it, had a whipsaw-like reaction, false bear trap. Bull traders and or long traders came in aggressively, backtested the 50 exponential moving average really to the button and held up, only to be rejected amongst that primary reactionary uptrend line twice. And really what had happened was we ended up breaking out right amongst that key inflection point. We ended up backtesting it once again. It was off to the races here. Backtested again, and again, once again, off to the races in a great rally where we ended up respecting this level, multiple reactionary lows right across that sphere, correlated with the 200 exponential moving average. It was, again, once again, lights off to the races, where we ended up never retesting that key inflection point for nearly almost a year, going back since March, the beginning of the year. And here we are. I have this minor primary reactionary downtrend line correlated here with the 200 exponential moving average, 200-day moving average, where the 50-day moving average is beginning to cross over the 200-day moving average. So the moving averages technical structure is signaling that we are at a critical juncture within the moving averages in very key technical levels, where we ended up already having a downtrend, slight downtrend, and backtested 3 days in a row now, and we are heavily being defended, where bull traders and or long traders are heavily defended at this key inflection point. The 106, 137 price support is only correlated, not a price support level, but only correlated and giving me the target of where that hidden primary uptrend line is. Bear traders, short sellers, they want to see a solid daily candle close, breakdown sell signal below that key inflection point, similar to July of 2022, for a much larger drop to the downside. And traders betting against the dollar, they need to step in here right now, right here. Again, provides an additional objective short trade, objective long trade entry for the risk reward ratio on a move to the upside, especially correlated with the spot price of gold there. And that would be an additional setup if you are bullish on the euro. As far as the technical momentum indicator dimensions, we are just completely flatlining, just all oscillator completely flatlining below their zero line thresholds, as well as the moving average convergence, and just consolidating for a much larger move, I believe. Whereas the oscillator histogram is just once again flatlining here, back and forth between the zero line, hugging on the zero line thresholds for dear life, which I would believe could have a potential impact in a massive, big drop to the downside, increasing the odds if and when this critical juncture is broken and backtested. Taking away all the lines here, and I'll zoom in. This is where we're at here, where we do have positive hourly divergence based upon a clean divergent low and all three technical momentum indicators. Again, the ball is in the long traders and or bull traders court as of now, where they need to successfully defend this key juncture really at all costs, and potentially on a move to retest and re-challenge the minor primary reactionary downtrend line to avoid and avert this potential death cross continuation technical damage right amongst the moving averages, to avoid a much larger breakdown within the euro, where my first target would be based upon the 105.248 price support, additionally down to the second target at 103.611. if and when we were to have a breakdown occur in the euro dollar. Taking you to the US dollar futures based upon the weekly interval, and we are at a monumental key juncture based upon a beautiful bullish falling wedge pattern with positive and or bullish divergences really constructed amongst all three indicators, with the oscillator just churning to the upside in a very slanted upward state, giving me that very strong inclination, which can also gauge in how powerful the move can be. Make no mistake about it, we are testing the 105.587 price resistance, and I believe we've reached a critical juncture. Again, if you're bearish the dollar, short the dollar, this would be your key, a pivotal transitioning zone to short the dollar with multiple reactionary highs and reactionary lows really across that sphere there. Call it multi-year price support, price resistance dating back since June of 2022, where bear traders, short sellers, they want to see a complete rejection of the dollar here and a prolonged move to the downside, potentially retesting the hidden uptrend line here that I have. It is based upon, call it multi-year price resistance and price support level based upon the 2015 reactionary highs and reactionary lows, cuts through a ton of wicks. And that would be the ultimate key inflection point if short sellers were to really take the dollar back down there to that key transitioning pivot point. As far as bull traders, long traders, dollar bulls, they want to see a solid final weekly breakout above this key inflection point, only further sending a potential short squeeze setup to the upside, putting pressure on equities, putting pressure right across the board on all foreign exchange on a prolonged move up to 107.918 price resistance, and it would only increasing the odds of a dollar milkshake, followed by infusing pure health back into these key technical momentum indicators, crossing their zero line thresholds, whereas the oscillator has already churned to the upside above its zero line threshold, and it would only continue fast momentum back into the technical sphere of this currency. A beautiful, bullish, falling wedge setup. Make no mistake about it. This was a complete, entirely beautiful breakout to the upside, and we are testing monumental key inflection points right as of now. Updating you on the XAU spot price of gold to USD, and I believe we could hone in on to a key inflection point, whereas I've completely taken away that primary uptrend line, and I have a new primary reactionary uptrend line based upon the November 2022 reactionary lows, call it a multi-year price support, and this has been heavily validated, very key inflection point. Whereas the euro were to break out and start to gain some traction and avoid selling off, defending that concealed hidden trend line aggressively, correlated with gold's 200-day moving average, that would signify a pop and rechallenge of this primary reactionary downtrend line based upon the May 2023 reactionary highs, and that would be a key inflection point correlated with the 1932.28 price resistance up above, and then additionally your 1944.20 price resistance. Again, a ton of resistance up above. Gold bulls, long traders, they want to see a solid breakout above, infusing health back into the euro and gold, only increasing the odds for a steady move right back up to rechallenge monumental big support at the 618 fibs retracement, call it 19, correlated with the 1982 price resistance, and that would be a big key inflection point, an additional big resistance zone to watch and or hone in on, with just a ton of reaction right across that sphere, reactionary highs and reactionary lows, really across that entire map there. Whereas you have the stochastics 1033 crossing over in a bearish crossover, usually acting as an early indicator. Again, you have flatline motion in the moving average convergence and the oscillator as well, similar to the euro, not as strengthening or as bad, but still it is just banging up against the zero line threshold, being rejected. Whereas bear traders, short sellers, especially, I've been hyping this key inflection point, this primary reactionary uptrend line, and we had a whipsaw-like reaction, bull trap. That again has been good for thus far, almost darn near hitting the 1911 for a minus 1.4% drop. Bear traders, they need to defend this primary reactionary downtrend line really at all costs to rechallenge on a rechallenging of the 1911 price support correlated with this monumental multi-year primary reactionary low uptrend line. And bear traders, short sellers, they want to see a solid breakdown in gold here, only increasing the odds for a much larger drop and a big move to the downside, rechallenging the 1885.70 price support, and then ultimately the 236 fibs retracement 1871.47 a price support there. And that, in my opinion, would only increase the odds and make a confirmed breakdown sell signal in an entirely different trend change, only surging the dollar, causing complete upheaval in financial equity markets, commodity markets, foreign currency markets, real estate markets, and leaving an all-out path of destruction in an all-out dollar milkshake melt up.